Hi everyone. Welcome back to AI Finance Buddy, your friendly guide to mastering personal finance. We make finance simple, fun, and accessible for everyone, whether you're saving for a goal, staying updated on market trends, or looking for smart ways to grow your money. Here, you'll find the latest financial news explained, practical tips to manage your budget, and easy to follow trading suggestions. We also believe in empowering you with financial education, offering quick lessons and relatable examples to help you understand how money works. Plus, this episode includes an inspiring real-life success story to show you how others have achieved financial freedom. Let's dive into today's highlights and take the next step on your financial journey together. Chapter 1, Today's Market News. Discover Financial Services just dropped some awesome news. They made way more money than everyone expected, like scoring a 100 on a test when you thought you'd get a C. They earned $5.11 per share, way above the $3.20 that analysts guessed. Plus, their revenue hit $4.76 billion, which is like finding extra cash in your pocket when you thought you were broke. Their stock is up over 1% in pre-market trading. Go, Discover. For Discover Financial Services, the suggestion is that they are showing strong growth and have recently exceeded earnings expectations, indicating a solid position in the market. However, keep an eye on potential credit risks as they manage their loan portfolio. The score is 85 out of 100. Alcoa is throwing a celebration because they beat earnings expectations. They made $1.04 per share, which is 11 cents more than what analysts thought. Their revenue was $3.49 billion, like hitting a home run when everyone thought you'd strike out. They're also super excited about 2025, predicting they'll produce between 9.5 and 9.7 million metric tons of aluminum. That's like planning a big party and knowing you'll have enough snacks for everyone. For Alcoa, the suggestion is that they are showing signs of recovery with strong production growth projected for the upcoming year, despite recent losses. The company is making strategic moves that could enhance its operational stability. The score is 70 out of 100. Meta Platforms is on fire. Bank of America just raised their price target for Meta stock to $710 from $660. It's like getting a promotion at work. Their stock jumped 65% this year, way better than the Nasdaq's 39% rise. This growth is thanks to them making more money than expected and managing costs like a pro. Plus, they're getting better at using AI, which is like leveling up in a video game. Keep an eye on Meta. For Meta Platforms, the suggestion is that they are showing strong momentum with impressive growth in ad revenue and a focus on AI, making it a compelling long-term investment despite some short-term fluctuations. The score is 85 out of 100. Overall, these positive earnings reports and growth projections from companies like Discover Financial Services, Alcoa, and Meta Platforms suggest a strong and optimistic outlook for the market, indicating that businesses are performing well and adapting to challenges effectively. Chapter 2, Simple Finance Terms Explained. Net income is the profit a company has after paying all its expenses and taxes. It's often called the bottom line. Nasdaq is an online market where people buy and sell stocks, especially known for tech companies like Apple. Day trading involves buying and selling stocks quickly within the same day to try to make quick profits. An exchange is a place where stocks, bonds, and other assets are traded, like Nasdaq or the New York Stock Exchange. An earnings call is a meeting where a company shares its recent financial results, usually over the phone or online. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Discover Financial Services could be a smart investment choice. First off, Discover Financial Services, DFS, has a low price-to-earnings ratio of 15.81, which means it might be a bargain compared to how much money it makes. Plus, it generates a lot of cash, with a free cash flow yield of 14.04%. This shows that the company is good at bringing in money, which is always a positive sign. Another great point is its current ratio of 4.19. This means DFS has plenty of cash and assets to cover its short-term debts, making it financially stable. And with a return on equity of 20.30%, it's showing strong profitability, which is fantastic for growth. However, keep in mind that investing always comes with risks. For DFS, potential challenges could come from the overall economy or changes in the financial sector. Economic downturns or shifts in consumer spending could impact its performance. In summary, DFS looks like a solid pick for the next year or so, but always be aware of the bigger picture. Happy investing! Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to taste a variety of fruits without buying each one separately. That's what an ETF, or exchange-traded fund, does for investing. It bundles many stocks into one easy-to-buy share, making it perfect for long-term growth. Now, think of the MSCI World Index as a global fruit basket, representing companies from 23 countries. By investing in it, you can enjoy the benefits of worldwide diversification, reducing risk while still savoring potential rewards. Hey there! So, let's chat about the MSCI World Index and some related ETFs, which are just funds that let you invest in a bunch of companies at once. First up, the iShares MSCI World Index ETF is a popular choice for investors. It tracks the performance of the MSCI World Index, which includes companies from 23 developed countries. Think of it like a basket of stocks from big names around the world. Then there's the SPDR MSCI Strategic Factors ETF. This one focuses on companies in Europe, Asia, and the Far East. It's doing pretty well, with over $935 million in assets, which is a good sign that people trust it. Lastly, the Amundi MSCI World 2 UCITS ETF is another option, especially for those looking for a hedged version, meaning it helps protect against currency changes. In short, these ETFs are great ways to diversify your investments and get exposure to global markets without having to pick individual stocks. Just a quick note, investing has risks. Stay patient and think ahead, and don't put in money you might need in a pinch. Chapter 5, Quick Financial Lesson. Have you ever heard of salary sacrifice? It's a smart way to boost your retirement savings while also lowering your tax bill. Here's how it works. Instead of receiving your full salary, you agree to give up a portion of it to contribute directly to your retirement fund. This means you pay less tax because your taxable income is lower. Let's say you earn $50,000 a year. If you decide to sacrifice $5,000 for your retirement, your taxable income drops to $45,000. This could mean you pay less tax overall, leaving you with more money in your pocket for the future. Imagine Sarah, a 30-year-old teacher. She starts salary sacrificing $200 a month into her retirement fund. Over time, thanks to compound interest, that small sacrifice can grow significantly. By the time she retires, she could have tens of thousands of dollars more than if she hadn't sacrificed at all. So, what's the takeaway? If you're looking to save for retirement and reduce your tax burden, consider salary sacrifice. It's a win-win. Talk to your employer or HR department about salary sacrifice options. Even a small amount can make a big difference over time. Chapter 6, Real Stories of Financial Success. How a janitor became a millionaire today. Let me share the story of Ronald Read, a janitor and mechanic from Vermont, who built a fortune of over $8 million despite earning a modest income. His secret? Simple living and smart investing. Ronald lived frugally, in a small house, and saved money wherever possible. In his spare time, he read books about finance and invested in reliable companies like Procter & Gamble and Johnson & Johnson. His success came from long-term investing and reinvesting dividends. When he passed away in 2014, Ronald left most of his fortune to the local hospital and library, showing that financial discipline and generosity can leave a lasting impact. The lesson: you don't need to earn a high income to build wealth. Live simply, save consistently, and invest wisely. Ronald proved that anyone can achieve financial success. Take a moment today to review your budget and explore investment options for steady, long-term growth. Chapter 7, Summary and Personal Investment Strategy. As we wrap up today's video, let's quickly recap the key points we covered. First, we highlighted some exciting news in the financial world, particularly focusing on Discover Financial Services, which recently crushed its Q4 earnings expectations. This strong performance could make DFS a smart investment choice, especially given its low price-to-earnings ratio, indicating potential value for investors. Next, we discussed the importance of understanding net income, which is the profit a company retains after all expenses and taxes. This metric is crucial for evaluating a company's financial health. We also introduced an ETF strategy, likening it to sampling a variety of fruits without the need to buy each one individually. This approach allows you to diversify your investments while minimizing risk. In our finance lesson, we explored the concept of salary sacrifice for retirement contributions. This strategy not only helps lower your taxable income but also boosts your savings for the future. Finally, we reflected on today's inspiring real-life success story of Ronald Read, who proved that financial freedom is possible for anyone with the right mindset. Now, For my personal investment strategy, I'm adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, Discover Financial Services, DFS, both with 101 leverage. This demonstrates the importance of cautious and diversified investing. Remember, it's essential to do your research, test different strategies, and consult a financial advisor to tailor your approach to your unique situation. If you enjoyed today's content, please like, comment, and subscribe. Your engagement helps us reach more people and ensures you don't miss out on future episodes filled with practical financial tips and insights. We'd love to hear your thoughts, whether it's topics you want us to cover, questions you have, or feedback on today's video. Your input helps us create content that meets your needs and fosters a community where we can all learn and grow together. Thank you for joining us today, and we look forward to seeing you in the next episode.